Before the pandemic, the Asia-Pacific was the world's leading manufacturing hub, but travel restrictions and COVID-induced lockdowns exposed the vulnerability of global supply chains. Now, many companies are looking for more reliable production centers closer to home. And for European heavyweights like IKEA, that hub could be set up in Turkey. Ludovica Brignola explains.
More and more Europe-based companies are eyeing Turkey as their next production hub in an effort to bypass East Asia and shorten their supply chain. IKEA, one of the world's biggest furniture brands, is one of them. As its CFO for Turkey has said, the pandemic highlighted the benefits of geographical diversification and showed how complicated it's become to concentrate production in places like China. IKEA currently has 7 stores in Turkey and already exports 3 times as much as it imports into the country, where it produces textile, glass, ceramic and metal products for global export. It says that producing in Turkey is more practical as it's closer to where the products are later sold. The company will save millions on transportation, with the cost of shipping a single container from East Asia to Europe skyrocketing from $2,000 to $12,000 in the past 18 months. Sweden's flat-pack furniture giant isn't the only company looking to shift its production to Turkey. Several fashion retailers, such as Italian brand Benetton Group, are also boosting manufacturing in Turkey, as well as Serbia, Croatia, Tunisia and Egypt. Benetton aims to halve its production in Asia.
Given the whole supply chain system, this is, when anything happens that, like we had during the pandemic, we see a major problem in the supply chain.
But there's a bumpy road ahead. Companies deciding to outsource their production to Turkey will also have to deal with a volatile lira, which has lost nearly 8% in 1 month, and with higher interest rates than the rest of the world, which are pushing up financing costs for investors. But in a world slowly adapting to new transport dynamics, China might risk losing its production hub crown, with Turkey standing in a front line poised to reap the benefits of a new global manufacturing order. Ludovica Brignola, Straight Talk.
And to discuss the ongoing changes to global supply chains, joining me now from Istanbul is Ozan Ozkural. He is the CEO of Tanto Capital Partners. And from St. Gallen, Switzerland, Guido Cozzi. He is a professor of macroeconomics at the University of St. Gallen. Gentlemen, welcome to Straight Talk. It's good to have you on the program. So, Guido, why are global manufacturers looking to shift their productions to Turkey? What the country does offer?
Well, Turkey has always been a crossroad between Europe and Asia, so it has always been very interesting. However, in this period, it is even more interesting because the pandemics and the rising tensions between the United States and China have shown the vulnerabilities of too long value chains. So it seems that multinationals are moving to nearshoring rather than offshoring. So they would prefer markets, places that are closer to Europe. And in this case, Turkey is fantastic because it has a potentially abundant labor force, well-educated, relatively cheap, and also it's extremely well operating connectivity westwards and eastwards, because we don't have to to forget that it is also part of the Belt and Road, still leaves the door open to interaction with the Far East. Mm-hmm. So I think it is an ideal location at the moment.
Okay, so Ozan, how has the global pandemic altered global transport costs? What specific areas has seen price increases and disruptions, and where all these left Turkey?
Look, right now we are in a what I think is a temporary hike in both logistics costs, energy prices, and what has really happened in effect is as follows. During the pandemic, obviously the demand side has faltered, and the producers had to adjust their supply capacity accordingly. But we came out of the pandemic in a manner and a speed that has exceeded the the forecasts of what the supply side, the producers, the industry, if you will, were forecasting. So right now, obviously, we are witnessing a significant hike in prices of both transport costs and energy costs. Although I do think these are going to be transitionary, but it has significantly and sufficiently disrupted supply chains, because knowing that the price hikes are here and that there will be potentially even maybe a more sticky inflationary kind of consequences,
Yes.
People are trying to stockpile, and that is causing stress on supply chains around the world.
So, Guido, what happens when the prices go down? Where does this leave Turkey? And how do you think Turkey has tackled with these problems in the early days of the pandemic?
Well, Turkey, I think, did very well. Of course, it suffered the pandemic, but it resisted. Its economy contracted less than many other economies. And also, its vaccination campaign has been very successful. At the moment, for example, the vaccination rate is comparable to that of the United States. So I think it places itself in a very good condition. Of course, I agree that inflationary problems are there, as they are rising also abroad. But I also hope that it's going to be transitory.
Okay. So the pandemic, Ozan, and the ongoing U.S. trade dispute has exposed the vulnerability of relying too much on China. But is this decoupling really a viable long-term solution for world trade?
Look, it's going to have to be, although I wouldn't use decoupling as an absolute term. We live in a world where we're all interconnected. Our global supply chains are interconnected. But the tensions between US and China are likely to spill over into US and Europe and rest of the world. And therefore, it is just natural that a lot of the industries around the world, manufacturers, will look to hedge their supply chain risks. And Turkey there provides quite a optimal alternative, albeit in a manner where it will not be able to absorb, obviously, the entire supply chain elements spilling over from China. But will it continue to tensions? Will tensions continue to rise? Yes. Will we have a full decoupling? I don't think so.
So, Guido, what are the challenges these firms will likely face while moving their productions to Turkey? And in return, what kind of assurances does Turkey offer to them?
Well, in my opinion, in the long term, the main potential problem would be, or maybe the main potential room for improvement is increasing the labor force. Because I agree that the labor force at the moment is young. The Turkish population is much younger than, say, Germany, which is comparable in terms of population size. Okay, the 50% of the Turkish are below the age of 32, whereas in Germany the figure would be 46. Yes. So the problem that we see, at least from a macroeconomic long term, is the poor labor force participation by women. At the moment, for 2 men employed, there is only 1 woman. And I think if the missing woman enters the formal labor force, the GDP will go up by at least 20%, even considering the possibility that they are already at the moment also in the informal sector. But of course, this leads to a message to multinationals. They should help that. For example, they should help guarantee adequate preschool childcare that some firms already do in Turkey, and gradually open up to this important part of the labor force, which is probably the only potential problem at the moment, because if I see the labor force participation rate of such a young population in Turkey, I see that it's lower than that of Germany, which is much older. Then there are also other aspects that should improve. For example, with Europe, connectivity should be improved also in terms of opening up the market more than the current treaty, which is penalizing Turkey. quite massively. And then, of course, other stuff related to the currency uncertainty and the long-term perspectives on interest rates.
So, Ozan, what do you make of Guido's comments? I mean, how could Turkey further boost its potential? I mean, could improving global competitiveness serve for that purpose?
Sure. Look, I mean, and adding on to Guido's comments, I would split it into three different pillars. One around providing the right legal framework that will attract technology transfers to take place to Turkey. Because ultimately, we are not just talking about producing more for the global ecosystem, but we are producing more high value added products. Yes. For that, we have to have the legislative landscape that can attract those technology transfers to the country. That's pillar number one. Pillar number two, I think, is around the future growth of a sufficiently voluminous blue-collar qualified workforce. I mean, yes, Turkey has expanded its universities significantly, but we also have to focus on expanding the polytechnics that are focused on educating blue-collar workers that the industry will invariably need to meet that global demand. And the third pillar is obviously around the financial services sector, the cost of borrowing, Turkey continuing to be a part of the global macroeconomic and economic world system.
So, Guido, what kind of opportunities has this pandemic presented to major manufacturers as well as Turkey?
Well, the opportunity is obviously, as was said, to improve the value chain qualitatively, to make it more secure, make it be shorter, not too far away, but still secure and flexible, which again, I too agree, it's not decoupling. It is keeping doors open eastwards and westwards, as Turkey does.
All right, gentlemen, unfortunately, we'll have to leave it here. Thank you very much for joining us on Straight Talk.